What is going on, everyone? Welcome back to another episode of the NJ Show. Welcome to my show. It's your boy Trader NJ. Lots to talk about today. We've got some really important information to really dive into, and I want you guys to pay real attention to this one. This is going to be a very, very important episode. It's not your typical crypto episode. Of course, we're going to cover Bitcoin, we're going to cover Ethereum, we're going to talk about price, we're going to talk about crypto, of course we are, but at the same time, today we're going to focus on FOMC. We're going to focus on the dollar index. We're going to focus on the dollar itself, because the Fed have, again, upped the rate hikes. All right? This is up the rate hikes, up the rates, right? So it's a rate hike. Now, a lot of you guys who join the stream, you guys won't understand what that means. Right? So the objective of today's episode is to try and break it down in a way that you guys can understand, right? Because this affects everyone. It's going to affect everyone. And you're going to want to tune in to listen to this. So, you know what? Drop me a comment. Let me know where you guys are tuning in from. I can see some hellos already here. Brown Hulk says good afternoon. Dana says hey, hey. Muzza says yo, yo, peeps. And Vegeta Crypto, welcome to the stream, my friend. That's twice in a row now. Appreciate you joining. Big up Vegeta Crypto. Angela Marco says trim looking fresh. Pablo Pedanto says what's up? What's up, guys? What's up? Joel says he's tuning in from Thailand. Hello, mate. Muzza says Sydney. Nadim Olia says hey all. Manuel Sue says Vienna, baby. Gul says hello from Istanbul. Merhaba, merhaba, merhaba. And Chosen says let's go. Good morning, everyone. Good morning to you. Good morning to you. All right. So let's kick off the stream with a bit of Bitcoin. All right, because we know we love to kick off the stream with a bit of Bitcoin. I know you guys can all see my chart here. So yesterday, when we spoke about Bitcoin, we spoke about some trends. We spoke about where we were in the current cycle, and we ascertained that at the time being for Bitcoin, it wasn't safe to just say let's long Bitcoin. All right, yes, we are in a position where we're falling. We are in a position where we're nuking in a cataclysmic fashion. I appreciate that. However, we weren't in a position where we could say, should we long Bitcoin here? So we made a trading plan yesterday. We said, all right, we've got levels of support and resistance that we can trade. All right. We decided that the 18 to 19,000 level was an area of support which we would pay attention to. Did we hit that level yet? No, we didn't. So our trading plan for that level hasn't quite played out yet. However, we had a very, very interesting Monday, didn't we? For those of you who tuned in on Monday, you would know that Bitcoin had a massive sell-off. Massive sell-off. So that gave us Monday's range. And yesterday, part of our trade plans were, okay, if we can reclaim Monday's low, the green line here, if we can reclaim Monday's low, we would have a potential long to Monday's mid and ultimately to Monday's high. Big trade. That's a lot of money to be made in those trades. Bitcoin hasn't followed that plan yet. All right? Because it hasn't followed that plan, we have no trade. As you can see, Monday's low doesn't really appear to be holding, does it? It doesn't look very good at all. So until we can reclaim Monday's low, which sits in at 21,870, we're not going to be able to make a trade plan that's worth discussing. All right, so that's where we are right now. We're in no man's land right now for Bitcoin. I wouldn't be longing, and I certainly wouldn't be shorting. Do I think we can go lower? Do I think we can go higher? The confirmation plans need to be in place before I can make that decision. All right, so for Bitcoin, we have to stay pretty quiet on Bitcoin today because there's nothing to do on it. It's in no man's land. If you long it, you could get stopped out. If you short it, you could get stopped out, and the probability is really high. All right, it's a very risky market. And in a market full of risk, you should know yourself by now not to trade it. If you focus on simply trading when the market allows you to trade, if you focus on when the market lets you trade, you will make an enormous amount of money. However, if you trade, for instance, if you're trying to trade every single day, you're going to most likely get stopped out and blow your account. All right, that's how trading works. I used to do that as well when I was younger. I used to look for a trade every single day when the crypto space was volatile. I used to say, yeah, 10%, 20% a day is doable. And it didn't really work out for me. You have to have a very special set of skills. And no, I'm not making a Taken reference. I'm just saying you have to have a very special set of skills in order to do that every single day. A lot of people take years in the space before they can do something like that. And if you haven't got that 7 years under your belt, you should probably sort of wait till the market allows you. Now, if you were shorting, say for instance you were shorting, then you've been winning. You've been winning since all the way from 69k because you've been shorting. All right. Similarly, for most of you, we prefer longing. So if you prefer longing, then you've got to wait until the market gives you that breathing room in order to long. All right. So we're going to move on to ETH very quickly because I want to start talking about FOMC. ETH, again, the same thing. So what did I say? I tweeted yesterday, in fact. What did I tweet saying? Let's have a look. Let me go to my Twitter real quick and let me see. I said, be careful. So yesterday we had a spike up in ETH, all right? We had a spike up. Notice how we deviated below 1050, which I said was support. It looks like we reclaimed it. All right, it looks like we see how we deviated below it, came above, retested it, beautiful wick off support, and then we started pushing up. Now, I tweeted yesterday and I said, be careful buying into this candle. There's no long for me until we break above 1350 and hold. So this level here is the 1350 level, this blue line right here in the middle of the screen, 1350. I said, I'm not longing ETH until we reclaim that level. That's the important level for me. All right. Until then, 1050 is support, which is where we are right now, around the 1050 level here, support. The next level below that is $776. All right, so once again, we are in no man's land for ETH. All right, and it's the same for Bitcoin. We're not in a position right now where a trade has high probability. And that's what you need to be looking for when you're tuning into these shows. Whether or not you're tuning into my show, somebody else's show, whether you're looking at charts on Twitter or Telegram, you need to look for the confirmation plans. That's how the game is played. All right? You've got to excuse me, my allergies are flaring up again. It's always the case with this hay fever. So, moving on to Bitcoin dominance. Bitcoin dominance. We've been falling, all right, and we've seen some alt relief. We have seen some pretty decent alt relief since Bitcoin dominance has been falling. So every day we tune into the stream. We've got a plan. We wanted that 50% level to sort of be resistance, but we've broken down before that. We're at the mid range of this level now, of this range. We're at the mid range. Mid range falls in at around 45%. If we can break below this mid-range and we can push towards 40% Bitcoin dominance, we might have enough relief in altcoins to give us that time to really exit our positions. Coins that have taken big drops, which we'll look at in just a second. We'll open CoinGecko here and have a look at the top 10 sort of altcoins. Bear with me. So yeah, so look. We've got red across the board here, but for the day itself, we've got some alt relief, We've got Solana 10% up. We've got Dogecoin 7% up. We've got BNB 4% up. Ethereum itself is 4% up. So the way that things are looking at the moment, it's looking like we're getting a bit of relief. If we can break below this 40%, 45% mid-range and we can push towards 40%, we'll get enough relief to exit all our positions and really sort of handle this bear market for what it is. I know a lot of you haven't really gone into USDT yet or USDC, so we can't complain if the market does give us an opportunity to do so. All right, so keep that in mind. You've got the chart here. Let me zoom out for you guys a little bit if you want. You've got the Bitcoin dominance chart here. Whether or not if we bounce from this mid-range here, I'm expecting 50% to be resistance. And I'm hoping that we can get something along the lines of this. Bear with me. Let me go to the daily. I'm hoping we can get something along the lines of this. See, over here, 50%, 50% here. That's what I'm hoping for. So we'll wait and see how it unfolds. It could be this week. It could be next week. We'll see what happens. All right. Again, let's have a quick look here. So XRP is up 3.2%. Polkadot is up 5.8%. We're looking to break that $8 level. Overall, Tron is, Tron is 16%, 17% up for the day, and we're going to talk about Tron as well in this stream. We'll talk about Tron. We have got some news for Tron. We've got some really interesting news for Tron, so we are going to talk about Tron today as well, later on, sort of towards halfway through the stream, after FOMC stuff. I'll talk about Tron. All right. But ultimately, as it stands, it's a pretty decent day for crypto in terms of altcoins, in terms of a bit of relief. Obviously, everybody's still down. I appreciate everybody's still down. We're going to be down for a little while. However, you know, we've got to follow the trend. If we can get to that 40% level on Bitcoin dominance, it should give us the relief we're looking for. Let's have a quick look at the comments. Let's have a quick look at the stream. Can we get a like spike? We've got 30 people watching, but only 15 likes on the channel. Can we get those likes up to 30? Support the channel. It helps me bring videos for you daily. I come on live every day, every weekday, Monday to Friday, 12:15 p.m. UK time. You don't want to miss it. I bring you the latest and greatest crypto news. I do the research for you so that you don't have to. All right. So get those likes up. Support the channel. Appreciate that a lot. Make sure you're subscribing as well. We're getting closer and closer to that 2K subscriber mark. All right. That 2K subscriber mark is important because I'm going to be doing a giveaway. Over on Twitter, I'll be doing a giveaway. Once we get to that 2,000 subscriber level, I'll do a nice giveaway for you guys to show love that you've supported the channel and whatnot, and we're growing, etc., etc. Having a look over at some more comments, Budapest 666 says, "Hi, do you think TRX is the next Luna?" Well, we're going to talk about TRX after we talk about FOMC. Elizabeth says, "What do you guys think of the new thumbnails?" Yeah, I like the new thumbnails, to be honest. It took me a little while to get my groove in, but we've got some pretty cool thumbnails now. Let me know what you guys think in the comments and whatnot. Wizard XBT says, "Hard. The new thumbnail is looking lit." Appreciate that, bro. Really appreciate that. Gould says, "Hey, NJ, could you please make a video about how you started trading? What was your mistakes at the first times, your best trades? How did you learn, and your suggestion for newbies?" Yeah, that could be a video I do in the future. It could be. That sounds like an interesting idea as well. It's something that I might consider doing in the near future. But look, let's move on to the main topic of discussion. You've seen it in the headline. You've seen it in the thumbnail, which is looking quite banging, I may add. But this is what it's all about. And I'm going to try and break this down for you guys in a way that can help you guys understand it. You know, initially when I started reading stuff like this, I used to sit there and think, oh, fuck me, what am I reading? I don't even understand what none of this means. You know, this was about 5 years ago. So I always thought to myself, if I was ever to explain it to someone, I would pick the most retarded version of myself, put myself in a room, and I would talk as if I'm talking to that guy. All right. So the idea behind me explaining this to you guys is my communication needs to be on point. So make sure you leave a comment and let me know how I explained it. Let me know if you want more videos like this in the future. And make sure you like and subscribe, all that bollocks. So look, the Fed hikes its benchmark interest rate by 0.75%, the biggest increase since 1994. Okay, so 75 basis points. What does that mean? What does that mean for the average person? I know a lot of you tuning in today, you guys want to talk about cryptocurrency, you guys want to talk about Bitcoin and ETH, but you guys have to have a clearer understanding of what the global market is doing. You guys have to have a clearer understanding of how the global market impacts you on a day-to-day basis. Yes, you might not be that kind of person that trades, that sits at your trading view chart for 12 hours a day, etc., etc. You might not be, but this is information that you need to know. It's a general day-to-day piece of information. And for some reason, not many people know it. Apparently knowing this means you're woke. So you've tuned in today. I'm going to try and break this down for you. I've written down a sentence here which I think explains it the best. So before we go into this, I'm going to read this out to you. And let me know if it's good or not. All right. The US Federal Reserve raises interest rates by 75 basis points. The biggest rate hike since 1994. Cool, that's the headline. But what does this mean? What this means is that this makes money more expensive to borrow. All right? Think of loans. This makes money more expensive to borrow. Essentially, banks will pay you more in interest. So when you are doing your savings account, etc., etc., whatever interest you're making, the bank is going to increase that. However, they're going to charge a much higher interest rate while loaning the money itself. Does that make sense? I hope that makes sense. Rewind it a couple of times if it doesn't, but we're going to have a little discussion about this now. I'd love to see your comments in the chat as well. Maybe if you guys have different opinions. The dream is to see me make an opinion or me make a comment and I get like 30 people in the chat saying, no, NJ, I think you're wrong. And we can start having a debate, pushing back and forth. It'd make the channel a lot more interactive. It'll make it a lot more interactive for you guys as well. And obviously, I'd love for you guys to be heard as well, you know? So how does this affect you? What I've just said, how does it affect you? It affects you because it makes it tougher for people like me and you to afford new houses or to set up new businesses. And in turn, it slows down the economy. And this is what we're going to be talking about today. That was the sentence. I'll read it out to you one more time just because I kept talking and waffling in the way. US Federal Reserve raises interest rates by 75 basis points, the biggest rate hike since 1994. What does this mean? This makes money even more expensive to borrow. Basically, banks pay you more in interest but also charge higher interest while loaning money. How does it affect you? This makes it tougher for people to afford new houses or to set up new businesses, in turn slowing down the economy. All right? So let's talk about that a little bit. Let's talk about that. What does this all mean? First, we'll have a quick look at the article, and then we'll make some opinions, and we'll talk about how it affects the normal person day in, day out. All right? Because look, I'm in my 30s. I'm in my very early 30s now. Now I am, yeah. And you know, things as you get older, things happen. Like, you know, you want to buy a house, or you want to start up a business, or you want to do something that generates more money. Not everybody wants to do a 9-to-5 because a 9-to-5 doesn't pay out as much as it normally did in the past. 9-to-5s these days aren't as easy to succeed as they were in the past. It's kind of a saturated market if you think about it. All right, but we'll talk more about housing and whatnot in just a moment. Let's have a look at this article very quickly, and I hope I don't lose your attention here. I hope I don't lose your attention. Stay with me. I will break it down into layman terms as we go along. The Federal Reserve on Wednesday launched its biggest broadside yet against inflation. Raising benchmark interest rates 0.75 percentage point in a move that equates to the most aggressive hike since 1994. You know, in 1994, I was 3 years old. A few of my best friends are watching the stream right now as well. They were 3 years old too. Stan says hi. Hi, mate. Hi, Stano. How's it going, mate? Appreciate you joining the stream. Thank you very much. So, the federal chairman, Jerome Powell, what did he say? He says, we want to see progress. Inflation can't go down until it flattens out. Powell said, if we don't see progress, that could cause us to react. Soon enough, we'll be seeing some progress. What this article is trying to express to you guys is that 75% basis point increase is a very aggressive increase. It's like you go into a boxing match and you see two of your favorite fighters sort of fighting. They're throwing a couple of jabs, and then the fight ends. The judges, they have a score sheet. One person wins. All right. If you have the same fight and then one of your favorite fighters hits the other fighter so hard he gets knocked down, and he gets thrown out the ring, everybody would be like, oh wow, oh my god, this is crazy. It's going to be trending all over. There'll be clips and stuff like that. So think about that scenario and apply it to this scenario. 75 BPS is a lot. It's one of those news events where you're like, oh fuck. You know, sorry for the language, but I had to use the F word. That's kind of the stance I need you guys to see it at. All right. That's where we are at the moment. 2022 outlook growth. Officials also significantly cut their outlook for 2022 economic growth. So, you know, earlier this year, the Fed were talking about making a better economy, making a more stable economy. They were talking about fighting inflation. They were talking about making it easier to borrow money, easier to buy houses, easier to buy cars, easier to take loans. And instead, what's happened is we're in June now, and they've completely done the opposite. These guys are moving like Manchester United. I'm joking. They're not moving like Manchester United. No one could be as bad as Manchester United. They're suffering the worst out of all of this. But that's what they've done. They've come in June now, and we've had an increase of 75 BPS. And if you look here, right, I know this is not going to mean much to you guys here, but try and stick with me. And try and, you know, this is one of those streams where if you keep watching it every day, your knowledge is going to grow every day too. You'll get to a stage where I'll be saying something, I'll say it once, and you'll immediately understand. It'll immediately make sense, and you'll be like, all right, can we move on to the next thing now? I get this. So, you know, this is a sort of 5-year chart, right? So December 2017 all the way up till June 2022. And notice as well, December 2017 was kind of when we had that blow off top in crypto too. We had Bitcoin hit 20K in 2017 for the first time ever. So it's kind of interesting that they've used this metrics from December 2017 on to June 2022. So notice how the increase was 25 BPS every sort of couple of months, couple of years. And towards the COVID crash, when the COVID crash happened, you guys know yourself that the most money that was ever printed got printed. So if we take the last 5 recessions, all right, we take 1, 2, 3, 4, 5, put them all together, and we have a total. Underneath, we have an equal sign, and we say this is how much money was printed in the last 5 recessions. With me? Now, during the COVID crash, we printed more than all 5 of these recessions, and we did it in quarter of the time. We're talking stimulus checks. We're talking money going left, right, and center. That money was used to pump the stock market. That money was used to pump Bitcoin. That money was used to pump the crypto market. Obviously, the OGs from 2017, they knew that the crypto market would go up again anyway. They knew it would. All right. We believe in crypto. Everybody here at the moment, you guys are here because you believe in cryptocurrency. You believe in what it can do. You believe in the future of cryptocurrency. I'm a firm believer that we're going to have another bull cycle. That's why I'm here on YouTube every day. I'm preparing for it in the same way that you guys are preparing for it. And every time I prepare for it in a different fashion, I'll update you guys and let you guys know. That's why we're staying up to date with the news. That's why we focus on the charts every single day, because we know that Bitcoin will surprise us once again. That's what it does every couple of years. It surprises us over and over again. So going back to this, with these rate hikes, what happened in March 2020 would lead, with every action, there's an equal and opposite reaction, right? Albert Einstein, you guys know that, all right? When this happened here in March 2020, it was just too much. It was simply too much. Money, it caused the inflation. COVID was a very unique scenario, all right? It's a once in a lifetime scenario. So if you were here during COVID, which you were, I'm sure everybody here was here during COVID. There's not going to be anyone here that's a year old watching the stream. However, your kids will never experience that kind of event. Your grandkids may never experience that kind of event. That's how unique the COVID situation was. So the amount of money that was printed in that time has now led us to where we are now, where there is just too much money circulating, and it's circulating in the wrong order. The circle of life at the moment isn't good, and I'll explain it. Okay, here we go. Here comes the explanation. Let's quickly scroll down first. There was a little paragraph here that I wanted to mention before I explain it, but am I just being a douche here? Can I not see it? Ah, yes. Here it is. Clearly today, 70 unusually large one. All right. So I'm going to highlight this one because I want to come back to this as I explain this next bit. Let's have a look at these comments, man. I'm getting some nice comments out here, We've got the guru over here, Dean. Dean says, higher lending interest rates and increased living expenses reduces consumer discretionary spending as they have less money left over paying their main bills. Dean, you should be streaming with me, my friend. You're a very smart lad, I'm going to break what Dean said down in a moment because that was my next topic. Elizabeth says, support and hit the like, guys. Thank you very much, Elizabeth. She's right. Support and like the channel, guys. Like the stream. Show some support. Hus says, love the stream. Thank you very much, mate. I appreciate that. I aim to bring you the best I can. So look, let's look at the circle of events. All right, let's try and understand this better. What did I say? I said this makes money more expensive to borrow. Now, expensive doesn't just mean the interest that you're paying in loans. In the past, it was much easier to just go to a bank, sit down. I'm picturing my mum and my dad at the moment in their olden clothes, going to a bank, mum holding her purse like this, my dad doing this, saying, yeah, I'd like to take out a mortgage on this house. Bank turns around and says, okay, let me have a look at a few documents and a few pay slips. Voila, here you go. Congratulations, you've got your house. Cool. We can all agree that's how it was in the past. As time has gone on, due to things like this, you can't simply just walk into a bank now. Technology has increased in a way whereby a lot of calculations and a lot of algorithms are spinning in the background. That makes it a lot more difficult to get a house now. Now, getting a house is kind of like one of the milestones in a person's life. All right, you, in an Asian family, you get married, you find a nice girl, you get married. Once you're married, you go and you get a house. Once you get a house, and you can start focusing on having kids, etc., etc. That is the circle of life for most families out there. How do you do it now? Because if you're getting a job, a standard 9-to-5 job doesn't pay what it used to pay, or arguably it pays the same as it used to pay. However, things have become more expensive, including money. Money itself, borrowing money, costs more now. Does that make sense? Are you guys connecting the dots here? I hope you are. I hope it's making sense. If it doesn't make sense, message me on Twitter, or DM me on Twitter, or spam my Twitters with loads of comments, and I'll break it down for you guys further. But essentially, it's much more difficult now to get money because it costs more to borrow it in itself. And so getting a house becomes impossible. Now, let's say, for instance, you don't want to do a 9-to-5. Let's say, for instance, you believe in starting your own business. Well, if you're starting your own business, there are two ways that you can go about it. You can go about it by funding it yourself, or you can borrow money to fund it. Now, the problem is, if you're borrowing money to fund your business, you need to pay that money back. But if your business is producing statistics that the same business 20 years ago would produce, how are you going to pay that money back? It makes it harder to start up a business. Now, if it makes it harder to start up a business, then how are you going to employ people? How are people going to find jobs? Because essentially, let's say, for instance, we reverse the scenario, right? You're not a business creator. You're a 9-to-5 guy, or you're a 9-to-5 girl. You say to yourself, it's Monday morning. I'm going to get my CV up. I'm going to put my suit up, do my tie, and I'm going to look for a job today. But those jobs don't exist because the business owner hasn't created the business to create that job for you, because the business owner can't afford it. Now we get to the climax. What does this mean? What does this mean? Because I've been calling for a major crash in the last 2 weeks. I'm like, yeah, guys, the dollar's gonna die, bruv. The dollar is fucked. Everything's fucked. You know what I'm saying? I've been calling for this for a while now. So what does this mean? Boom. So what does this mean? Simple. Buy the blood, sow the green. What does this mean? This means that in order for people to sell their houses, sorry, not in order for people to sell their houses, I'm going to get to that. In order for people to buy their houses, they're only going to be able to buy a house if it costs less. So let's say, for instance, you get a house that costs 500 grand, all right? GBP, 500k GBP, all right? Most people won't be able to afford that now because they can't get a loan worth 500k, because the interest will be too high on a loan that's 500k because their 9-to-5s or their businesses don't support it. Make sense? Which means that people who want to sell their houses will have to sell at a much lower price. However, why would somebody sell their house if they were selling it for a lower price? I'll explain. Let's say the person who already has the house is in a 9-to-5 and they get laid off because the business owner can't afford to keep the business running because inflation has fucked them. The homeowner in that 9-to-5 has now lost his job and can't afford to pay the mortgage, and he must sell his house and go into a rent type agreement in order to survive, in order for his family to have a roof over their heads. But they can't sell their house for what it's usually worth. They have to sell their house at a much lower rate in order to survive the recession. How do they do it? They can only do it by selling the house lower. Now, this is very similar to crypto in the way that we trade. The way that we trade crypto, it's very, very similar. We could sort of compare this to liquidation. I have a house, it's worth 600 grand. I've lost my job. I've got to pay my bills. I'm 3 months in now. I'm getting letters coming to my house saying you haven't paid the bills. I've got to sell this house in order to move into a rent type place so that I can afford my bills and I've got some money to survive the recession. But then I want to sell my house and I've got to capitulate and I've got to sell it lower for a much lower price because I can't afford it. Capitulation, liquidation. I've now lost a hell of a lot of money. Hence, the housing crash. Make sense? The housing crash. A lot of people have been talking about this over the last 5 to 10 years. How will the US, how will the UK avoid a housing market crash? Because houses have been going up in the UK for the last 40 years. I'm not sure if it's 30 or 40. I'm only 31, so I don't know how long it's been going up for, but ever since I've been able to understand my dad talk English, house prices have been going up. All right, we've never had any sort of real correction. Where would the correction come from? We can't just suddenly decide houses are going to cost less. There has to be a reaction to something. We need some sort of catalyst for the housing market to react. And here we go. 2020, we had the COVID crash. God, these allergies are so horrible. 2020, we had the COVID crash. We are now seeing inflation at an all-time high. We're seeing credit card debt in the UK at an all-time, in the US at an all-time high. And we're now starting to see the domino effect that this is starting to produce. We're starting to see it now. We've seen crypto. What happened to Bitcoin? What happened to Bitcoin? Because the stock market crashed in a way that nobody expected it to crash. What happened to Bitcoin in response? Bitcoin has taken the biggest crash it has ever taken. Look at Ethereum. Let me take you guys over to Ethereum and let me show you the extent of what I'm saying. Yeah? Let me go to the monthly. Let me remove all the lines on my chart and let me explain to you guys what I'm seeing. This is not an old enough chart. But look at the correction that we had from 2018 all the way to the lows. We consolidated for a very long time and then we pushed back up. At the moment, as it stands, the correction that we've had in Ethereum now is higher than any other correction Ethereum's ever made in its time. That's where we are in the market now. And that's because the S&P has taken one of the biggest drops it's ever had in its lifetime, and even as we speak right now, it is making a new low. So if you guys watched my show the other day, I mentioned the S&P. I said we were at monthly support, and I said how low do I want the S&P to go? I don't want the S&P to really go any lower than sort of 3,400. We can deviate, the famous deviation where we deviate below a level, reclaim it, show bullish price action and push up. We can do that. However, and are we doing that right now? It remains to be seen. The last time we touched a monthly level for SPX was here in 2020, the COVID crash. Look at this candle here. Look at this candle right in the middle where we wicked on the blue line. This right here, this is monthly support. The next time we did that was 2 years later, June 2022, here, monthly support. Look at all these green candles, white candles, all these up candles. Right? And the first time after 2 years, we are now retesting monthly support. Does it look good right now? No, it doesn't. It doesn't. Because of this news that we're talking about today, because we're talking about inflation, we're talking about rate hikes. It doesn't look good. All right? But we're going to play the market with what it gives us. If it's a deviation, we'll ride it on the way back up to resistance. You'll catch it here on this channel. We'll find the trade plan here on this channel. We'll catch it. So make sure you're subscribed. You know, until then, we have to assume the worst. Now, this paragraph here, I want to read this paragraph out to you here because I've spent the last 30 minutes explaining to you guys how crucial it is, how deep it is that we've got this news today. Fed raises rates by 75 basis points. Crucial news, right? Crucial news. And yet, listen to what it says here. Jerome Powell says, the chairman of the Fed, clearly, today's 75 basis point increase is an unusually large one. Okay, we've spent 30 minutes talking about it. We get it now. We all get it. You're all experts now. And I do not expect moves of this size to be common. Oh. Good. Good. I've been raped once. I'm not going to get raped again. Awesome. He added, though, that he expects the July meeting to see an increase of 50 to 75 basis points. So, let me tell you, never again, I promise, I'm going to tell you right now, never again. What? 75%? Shut up, bruv. Shut up. What do you know about market? This is never going to happen again. Except maybe next month. One more time, potentially, just one more time. That is where we are right now. So he's turned around and he said, never again. It's unusual. It's an unusually large move. This is not going to be common. This is not something that's going to happen again, except maybe next month, you know. Hey, honestly, bruv, next month it might have to happen again, you know. That's what he said. And if we move over here, we see Powell says the Fed could hike rates by 0.75 percentage point again in July. When is July? Is 2 weeks away. We're 2 weeks away from July. Like, this is major news that I'm delivering to you guys right now. I know a lot of you guys might not understand the brevity of or the depth of this news, but this is major news. This is so a lot of the traders who time the top on Bitcoin, a lot of the guys who caught the trend reversal, you guys would know SC and XO, they smashed the market on the way down. I wouldn't be surprised if they made more money on the way down than they did on the way up. All right. How did they time it? How did they catch this trend reversal? Well, they noticed that the market was showing these bearish signs. So this is FA at its finest. They noticed that the market, that the rate hikes like this would happen. You know, Joel says, NJ, love this side of you, mate. Articulate, real. Oh, I've got to read this with my chest out. NJ, I love this side of you, mate. Articulate, real, knowledge on point, and clear direction. We have our UK group who are all starting to follow you. SC, XO. Appreciate you, man. I'm feeling kind of good right now, you know. Big up, Joel. Thank you for the beautiful comment, mate. Appreciate that. Elizabeth says, yes, perfect. It's clear. Thank you. Appreciate you guys. Make sure you guys are dropping comments in the live chat, you know. I read them out. I do read them out. I know I'm dropping some alpha right now, so everybody's quiet like, hey, what's going on? Shit, he's dropping some madness right now, you know. What's he going to say next? But make sure you throw your opinions in the live chat. I want to read it. I want to see what you guys are saying. This is your show, not mine, you know. I want the chat to have a debate in it. I know there's only a few of you here, but still, you know, drop your opinions. You're not going to be shunned. I'm going to respect them. And everybody else in the chat has to respect it too. Some people might think that this is a good thing. I have no fucking idea why you would, but I'd respect your opinion. Fed worse policy than Man United? Nah, man. Nah, Fed is not worse than Man United, man. Man United right now, bruh, after a season like that, I almost cried last season. My dad pat me on the back last season and said, it's going to be okay, son. We were in a bull market. I was making money, bro. Man was talking about buying car, this, that. And I was there watching United. I was like, how can my team look like this? And my dad pat me on the back saying, it's going to be okay, my son. And it's not. We're in the transfer window now and it's not okay. It's not okay. It's really bad. I'd pick the Fed over United right now. And the Fed have dropped incredible news. You know, Brendan says, make us fundamental experts, bruv. That is exactly what I'm doing today. That's exactly what I want to do. I want you guys to watch this video and then I want you guys to go and speak to people and explain to them in the way that I explained it to you in layman terms. Break it down for people so people understand. Dean says, rate hikes this month, a recession is next. Yes, I certainly believe. I would argue the recession has already started. There are certain countries, right? There are certain countries that have already started experiencing this type of recession and we need to open our eyes to it. We have to open our eyes to it because we are now victims of it. We're now part of this facade. We are not in a good economy. We're fucked. All right? I do have good things to say about it. We're fucked now. But do I think that Bitcoin is going to go back up, make a new all-time high and go beyond? Yes, I do. So if you've been watching for the last 40 minutes and you think that I'm saying everything is going to zero, well, you're wrong. You're not right. You're wrong. You know, Bitcoin will surprise you all over again. This is the depression phase. And it's funny because Mike says it here, more like depression in the US. Yes, this is the depression phase. The market is meant to make you feel like this. If you're feeling depressed and broke, you're in the right place. It means that you're in the right part of the market. All right? You guys have all seen that Wall Street cheat sheet. Depression is usually at the bottom. We just need to ride the depression out. We need to ride out the bottom. The bottom might be the bottom and price might not go lower, fair enough, but it's going to take time before we go back up. And news like this, where Powell says in June, we're going to have rate hikes of 75 BPS. Fuck. But then he goes on to say July might be the same thing. So again, put it into perspective, rewind the video and try and understand what was I saying about houses, about jobs, about businesses. These are things that affect you every day. The things that I discussed today about houses, jobs, they affect you more than Bitcoin does. So yes, I appreciate you guys might tune in to see a chart of Bitcoin, see a chart of SPX. Bro, tell me what you think. Price gonna go up, price gonna go down. Tell me what in your mind do you think is gonna happen. I appreciate all of that. But this is something that actually affects you. Some of you are tuning in from work right now. So this is something that affects you. You need to be asking questions like, is my job safe? Am I going to be paid enough? Is my rent going to increase? Is the value of milk going to increase? And if all of this is happening, then how is it going to affect the market? How is it going to affect the S&P? How is it going to affect Bitcoin? How is it going to affect the altcoins that I'm still holding from 2021? How? You need to start putting these things together to generate a big picture to understand. You know? The time to be stressed is now. The time to be worried is now. If we get news like this next month again, it's going to hurt the market. It's going to hurt everything. I'm not saying it's going to create majorly new lows. We've dumped from 70k on Bitcoin to 20k. I'm not saying that from 20k we're now going to go to 5k. But look, there could be a stream. I could come live on one day in the future, very near in the future. And the title, the main headline might be Bitcoin at 10k. What do we do now? Ask yourself, are you prepared to see Bitcoin at 10k? Are you prepared to see Ethereum at $400? Are you prepared for that? Most likely not. And it wouldn't just be you. I don't want you to listen to this, shit your pants and think I'm the only one not prepared. No, there's a lot of people that are just going to be blindsided by this. And that's why it's important that you should tune into the NJ show every single day. You're a muppet if you don't. Subscribe. Make sure you subscribe. I was looking at the analytics yesterday. Again, 40% of the people that are watching aren't subscribing to the show. They watch the whole show and they just don't subscribe. Some people tune in again. They watch the whole show and they don't subscribe. It takes you a second. If you've learned something, which you should have today, make sure you subscribe. As soon as we get to 2k subscribers, I'm going to do a giveaway. And when I do that giveaway, you might be one of the lucky people. I'm going to make sure it's for everybody, not just for people that are joining now, people who joined in from before as well. Incentivizes you to make sure you stay tuned. Crypto Dad says, I'm no muppet. I apologize, Crypto Dad. I remember you, Crypto Dad. You made a good comment the other day. It was a couple of streams ago. You're actually a smart lad. I'm glad you're tuning in again. Thank you very much for coming back. I appreciate you. I appreciate returners. I appreciate people who come back, you know. But anyway, let's wrap up this Fed stuff because you guys know enough. I feel like you guys understand enough from here. And like I said, you know, if you guys did learn something, make sure you smash the likes up. Make sure you show support on the channel. Make sure you show love so that I can come back live again tomorrow and the day after and whatnot. I'm going to be looking to bring SC on. Might be tomorrow. So make sure you're subscribed and you have the bell icon hit because I know a lot of you love SC and I know a lot of you love what he has to say. If he was here today, I would have not been able to drop as much alpha as I did because he'd be dropping all the alpha. So make sure you tune in. Make sure you tune in. But look, be careful. If you're doing the longs and the shorts, be very careful in this market. You guys know now that 2 weeks before July, we might have another 75 BPS increase. That is bearish. That is bearish. That's not going to pump the market. Nobody wants to pump the market with this kind of news. Money will have to exit the market so people can breathe. Got to think about it logically, right? If you have no money, but you have money in the market, you have money in an altcoin. Altcoin is at an all-time low, but you have money in an altcoin and you don't have money at all. You're going to have to sell that altcoin so that your kid can drink his milk today. You're going to have to sell that altcoin so that you can pay your rent. You're going to have to sell that altcoin because you're going to need to pay for fuel. Now, this is the weird thing. Bitcoin, Ethereum, and altcoins, they're at an all-time low. Your favorite altcoins are 90% down. But fuel is 100% up. So you've got to really think here. You've got to really think, hang on a second, this doesn't make sense. If I'm selling my altcoin bag for a 90% loss, but to fill up my car with petrol so I can drive to work every day, it's going to cost me £2 per litre when it used to cost me £1. And at the same time, I'm going to work and I'm getting paid the same salary. That doesn't make any sense. But my rent is going up. But the cost of using the bus is going up. The cost of using public transport in general is going up. This recession is going to hit people a lot harder than people expect. This bear market is not going to be for 4 years like the previous one was. I don't think it's going to be as long as it was. But we are going to feel all those brutal emotions that we felt in the last bear market. From 2018 to 2021, we felt some brutal emotions. I remember that bear market. It felt like it was never going to end. It genuinely felt like crypto was over. When that 3K spike came, when Bitcoin spiked to 3K in March 2020, it genuinely felt like it was over. I'm telling you, if you go back on my Twitter and go back to the COVID crash, I was shorting it. I was like, what, 4K, yeah? Hey, come, 2K. Let's go, 1.6K is support. At 5K, I shorted it. 6K, I shorted it. 7, 8, 9K, I shorted it. At around 9K, I realized, oi, we might actually be in a bull market now. And then I jumped on the bandwagon and I rode the bull market with all of you guys. But this bear market is going to hurt. It's going to hurt. All the emotions that we felt in the last one, we're going to revisit these emotions. And we need it. We need it to reset our brains, to reset the dopamine. The next, I was having a chat with XO today. And I shouldn't be quoting this, but I'm just going to give you a tiny little insight into the chat I was having with my big brother. Not Trader XO, but my big bro. Okay, so two brothers just having a normal chat. I said, big bro, do you know what? I think the next market is going to be like way bigger than this one was. Imagine how big the 2021 cycle was. Bruh, we had so many 100Xs, so many 1000Xs. It was insane. It wasn't as big as the 2017 one because the 2017 one was more concentrated. But the 2021 cycle had a lot more altcoins, but everything was just going crazy. Everything was going up. We had different sectors. There was money to be made, all sorts. There was all sorts of money to be made. All right? And I think that the next cycle is going to be even bigger than this one was. And he agreed with me. But it's just about being able to survive this cycle, being able to prepare, and being able to be established enough so that you have a plan when the next cycle comes. You might not have the money to invest, but if you have the patience when the next cycle does come, even your $100 can go a very, very, very long way. I shit you not. And we're going to be doing that on the stream. If I have enough people here, I'm going to be doing that. I'm going to be giving away private sales. I want you guys to get involved. I'll be giving away $100, $1,000 private sales. I'll be giving it away, just for you guys, because you guys deserve it. Especially you guys who are joining in now in the bear market when nobody wants to know about crypto. Nobody cares about crypto. It's 30 of you joining in and tuning in to try and learn and understand about crypto. You guys deserve it. You guys are the ones that are going to make it in the next cycle. That's my opinion. If you can stick around and survive. Tariq says, hello from the past. I'm 10 minutes behind on the live stream. Hello, Tariq. 10 minutes in the future. Hope you're doing well, mate. Thank you for joining again. Mike says, I'm expecting October to bring all prices down, which hopefully means more money will enter the economy. Well, Mike, honestly, I don't know if I can really agree with that. Money at the moment is exiting the market. These kind of things that we're talking about, house prices going down, jobs becoming thin, these things take time to pan out. They don't happen overnight. For instance, Bitcoin at 20K. For the people who are calling the top a year ago, they were calling the top with ideas that Bitcoin would go to 20K. But when Bitcoin was at 70K, we couldn't say that Bitcoin was going to 20K next week. It's taken nearly a year to do that. We're almost 10 months in. And now Bitcoin is seeing prices like 20K. So I think October is a little bit soon. I think if you was to say next year, October, that might be a shout. That might be a shout. A sort of little price build up, a little volatility building up towards the next halving for Bitcoin. You know, I'm going to drop a video about the Bitcoin halving, but like in a year, innit? I'm not going to drop it now. It's not going to help you guys right now, help you guys to understand what it is, but I'll drop it closer to the time when price starts reacting. You know, that's what we have to do. In the meantime, this is the news that we have. This is the news that we have in front of us. This is the news that we have to react to. And we have to try and break it down in a way that is going to affect us in real time. You know what I mean? A lot of people think that the markets and financials and whatnot, a lot of people think that it's extremely complicated, but it's not. It's not. When you love something, if you turn it into a game, if you turn it into some sort of movie story, you can start breaking it down and understanding it. I'm not a very smart guy. I can just break things down in a way that helps me understand it in my stupidest version, you know? So if you know, I would recommend that you guys watch this stream again if you guys want to watch it, just so that you understand exactly. I'm going to probably rewatch this stream as well to learn myself. Hearing yourself repeat it is something. So look, let's wrap up. Let's do another 10-20 minutes and sort of look at what else is going on in crypto, and then we'll wrap up the stream for the day. But that is the FOMC stuff. So look, if you guys have any comments on FOMC, if you guys got any comments on the Fed, let me know. Let me know. Leave some comments in. I'll read all of them out. So moving on. This was weird, man. I don't know if you guys saw this today. This was weird. Listen to this. To safeguard the overall blockchain industry and crypto market, TronDAO Reserve will withdraw 2.5 billion TRX out of Binance. I have no idea what they're doing. I have no idea why they would do that. They're saying to safeguard crypto, to safeguard the blockchain. So are they saying that something is wrong with Binance, or are they saying that their wallets are more safe? I don't know what they're saying here, but 2.5 billion TRX. Now, earlier in the stream, we had a comment earlier on talking about TRX. Someone wanted to know about TRX. And over here on CoinGecko, we saw that today Tron is up 16.7%. All right, it's up. It kind of goes along with this news. To safeguard the overall blockchain industry and crypto market, Tron will withdraw 2.5 billion from TRX. Now, how are they going to withdraw it? How are they going to pull it out? Are they just going to go on wallets and then hit the withdraw button? Or are they going to... I think that they're going to have to buy a lot of this. This is liquidity that they're talking about. They're going to have to buy a lot of this off Binance. And we're seeing the price sort of move in its favor. Tron... A project like Tron, with the market cap that it has, for it to move up 16%, it takes a lot of money. So yeah, it looks like they're buying their own token, you know? And Crypto Dad goes on to say, that's more than 50% of the Tron supply. Why make it illiquid? Exactly, I agree. I have no idea why they would do this. I'm not sure what the intention is. Maybe they're trying to show the community that they're holding their own token and that they're not going to sell, something along those lines. I'm not very sure, but ultimately, this kind of gives us an insight into what Tron is doing today. Obviously, we were talking yesterday about USDD and the depeg. We were talking about that. And we were talking about how Tron has been sort of pushing and injecting an influx of cash into the USDD ecosystem in order to make sure it stays with the peg. Now, I mentioned yesterday, I said on the chat, I was like, you know what, Tron kind of gives me Luna vibes. I did say that. I'm not trying to FUD Tron. I'm just saying that right now to be pushing your own stable coin right now, I'm not sure it's the smartest thing. I'm not sure if it will be able to sustain or succeed. And them doing this doesn't make me feel any more confident that they will succeed. So if you're longing Tron, I would say this. I'd say this is... I'm indifferent on this news. It's not bullish, nor is it bearish, because we don't know what they're going to do. Imagine they get these tokens and they start selling it. Like, imagine they're doing this and everybody thinks that these tokens are coming out of circulation. Everybody's like, yeah, 50% of Tron is coming out of circulation. Let's buy Tron. Tron is going to go up. And then they dump it at the top. That's not burning. That's not taking it out of circulation. That's dumping on their followers. So I'd be very, very careful. I'd definitely, if you're longing Tron right now and you're 20% up, I'd be very careful. I'd look to take some profits if it was possible. I'd look to be very, very careful and wary of Tron. We'll move on from here. Tron is very weird news today. Very weird news. Moving along. If you guys joined yesterday's show, we were talking about 3 Arrows Capital. For those of you who are new here, 3 Arrows Capital is a VC. It's a venture capitalist firm. One of the biggest in crypto. They had their up and coming rise in the 2021 cycle, and they made a shitload of money. They invested in projects like Axes and stuff like that, you know, to make a lot of money. They made super crazy amounts of money during the bull cycle, and you know, I looked up to them at one stage myself, but lo and behold, they've not managed those funds very well. And yesterday we spoke about yesterday on the stream, we were talking about insolvency and bankruptcy, and we spoke about, is this the end of 3 Arrows? So if you haven't watched yesterday's stream, I highly advise you check it out. It was a good stream, a lot of information that we covered there. Definitely one for the books to make you smarter. But now look at this. We've got an alert that 8,000 Ethereum tokens have been liquidated from this wallet, supposedly related to 3 Arrows Capital. So it looks like there's more bad news for 3 Arrows Capital. Now ask yourself, innit, how would you feel if you lost 8,000 Ethereum? Dude, I'd be shitting blood if I lost 8,000 Ethereum. Considering where we think ETH is going, all of us here in the chat right now, we know that ETH is going to 20k at some stage. So imagine, what does that mean? $8,000 ETH. It shows that 3 Arrows Capital are not managing their capital they're not managing their capital at all. They're getting fucked left, right, and center. Imagine being, I think at one point on Axes, they were 1,500x up. Now, when you're a VC of their size and you're investing in a project, you're not going to invest 2-3k. You're not going to invest 5k. You're going to invest 150k. You're going to be investing huge amounts of money, you know? And to be 15,000% up, 1,500x up, and not taking any profit, and now we're getting to this stage of the market and they're getting liquidated and all sorts of things like that, makes me wonder. It makes me wonder if these guys are going to make it for the next cycle. So maybe 3 Arrows aren't going to be around for the next cycle. The way that things are looking, I don't know. Maybe they'll make a comeback if they can save a couple million and invest it wisely in the next cycle. But the way things are looking, all these liquidations and stuff, it doesn't look good to me. It doesn't look good to me at all. Have a look at some of these comments. Let's see what we have here in some of these comments. Hey guys, make sure you smash up the likes, yeah? Make sure you smash up the likes. We need more likes on this channel. So let's see what we have here. Zahid says, hello, brother NJ. Irfan says, hi, mate. Are you a student of SC? Well, go and check my bio on Twitter and you will find the answer for yourself. Rolly Diaz says, I'm here to stay forever. Well, Rolly Diaz, well done on you, mate. I appreciate that. That's good news. Mike says, I agree. I said, hopefully. I have no idea what we were talking about then. Mr. Wet. Welcome back to the stream, Mr. Wet. He says, hit the likes, guys. Make sure you do hit the likes. We need more likes on the channel. We need more views. We need more subscribers. We need to grow this channel so that we can bring more episodes daily. Next bull market, I'm going to bring you guys some awesome videos. I'm going to really, really push to bring you guys some awesome videos, you know, some proper content. Brendan says, is USDT going to disappear? I don't think it will. I don't think USDT will disappear. I think that there's going to be a whole new type of USD cryptocurrency. I'm not sure where it will come from. I think the Fed will do it themselves. I think that the current dollar index is not going to hold. It's going to crash. And they're going to need an electronic version of it. Electronic version of it. You're copying crypto. What's the safest way to do it? The blockchain. So we'll see what happens. And if that happens, then boy, that's going to be bullish. That's going to be bullish for crypto. Massively bullish for crypto. Can you imagine that? You can't get more bullish than that, you know? Steven says, hi, NJ and YouTube crew. I just hopped in. Here, allergies is a bit better. Yes, my allergies were so bad last couple of days. They're bad today. I keep touching my nose. They're super bad today as well, but they're a lot better than yesterday. A lot better than yesterday. I've got my filter on today, which is, you know. Phil DeFrancisco says USDC. Well, look, mate, USDC is an interesting one. USDC, every USDC token is backed by $1 US. So there's no more US dollars. then what's going to be back in USDC? You know, it might actually end up being safer to hold Bitcoin and ETH, you know, just saying. Anyway, moving on. I will move straight over to this. And this will be the last sort of thing I cover today. Do you guys know Bitboy? Do you guys know Bitboy? I think everybody knows Bitboy. Bitboy is he's a famous YouTuber, famous in the crypto space. He's done very well for himself. He has his own show. I'm not going to promote it on this show, but he's got his own show. Here we look at Bitboy is filing a class action lawsuit against Celsius and its CEO. So again, you know, we've covered Celsius over the last couple of days on this channel. We've been talking about Celsius, and we've been talking about, you know, the catastrophe that Celsius has suffered over the last couple of days. You know, they've taken a $10 billion hit, and that was kind of because of Luna. Luna was the one that sort of started that, you know, and now we've got Bitboy, who is filing a class action lawsuit against Celsius and its CEO Alex Mashinsky. Ben runs a YouTube channel that goes by the name Bitboy with over 1.45 million subscribers. Guys, make sure you like and subscribe. We've got 1.6k subscribers. We can definitely do better than that. We can do a lot better than that. The prominent crypto staking and lending platform Celsius is witnessing a downfall, with speculation piling up over the other. The Celsius network had a particular turbulent weekend. The platform was chastised for its poor financial management. In May, the crypto staking network reportedly had a 1.7 million user and $12 billion in customer holdings. Oh, okay. $12 billion in customer holdings, and now it was what, 2 billion, I think? 2? So this is huge. This is huge. I don't think they can even recover from that, you know. So Celsius is to face further trouble with Bitboy's lawsuit. Ben, I guess Bitboy had a lot of funds on Celsius. You know, Celsius was the bank of crypto. It was the bank. And that's why they did so well, because they entered in the early stages of the bull market, and they offered services that a bank would normally offer in a decentralized fashion, as decentralized as they could make it, you know. And from there, a lot of people who kept all their funds on Celsius have now been unable to withdraw their tokens. And it's happened in a very, very fast fashion as well, you know. So if you've got any funds on Celsius, I'm very sorry to hear that. I do hope it resolves itself soon. We're definitely not here to make fun out of the Celsius situation. It's a very serious situation. A lot of people have lost money. Excuse me. And now, you know, Bitboy is suing them. And let's see what he said here. He goes, how Celsius and Mashinsky are actively scamming people right now. Our account rep at Celsius Network is Ronald Io. He told us that we had enough money in our account to pay off a loan, but we can't use the money in our account. We have to send Celsius more money to pay it off. You know, imagine you banked with the NJ Bank, all right? You log into your app and your account balance, it says $10,000. You think you've got $10,000, but in reality you don't. The bank account says that, but the $10,000 actually isn't there. It's just a number that's on the app. And that's what's happened here. Bitboy, he believed that he had money in his Celsius account, and the money is there. It states it there. But when it comes time to withdraw it or use it or pay for something or spend it, Celsius come out and say, nah, you got to send us more money because that money isn't actually there. So Bitboy goes on to say, imagine an insolvent company that you can't withdraw your money from asking you to send them more money. It doesn't make sense. Literally defies logic. So you may be asking yourself the question, why would they not let you pay off the loan with money, crypto stables that are already in your account? Because the money isn't there. Because they've been liquidated in certain positions, the market toppling in the fashion that it's toppled in, it's caused DeFi to take a massive hit. And if Celsius continues to slide down, it's going to be the capitulation event for DeFi. The entirety of DeFi will be in a very fucked situation if Celsius continue to go down. Goes on to say, this is a pure scam to try and bring in fresh money from users to pay off loans. the loans that they have. They can't afford to pay these loans anymore because their valuations have gone down by 6. You know? This is a pure scam. You see, once Ethereum hits a certain number, we get liquidated and lose all of our collateral against the loan. So they are trying to take advantage of fear in the market to pad their pockets. And you know what? I agree with him. I agree with him. It's a very unfortunate situation. There's a lot of climax happening in crypto right now. It's not just Celsius. It's a multitude of things. We've got 3 arrows. We've got Luna. We've got Celsius. We've got the Fed with the rate hikes. There's a lot going on in crypto right now. A hell of a lot. And nobody's paying attention. So a lot of people will be blindsided by the news. But you know what? It's a wrap. We're going to call it wrap there. I will see you guys tomorrow. Make sure, if you guys have learned something today and you guys care about the channel and want to see it grow, make sure you're subscribing to the channel. Make sure you're hitting that bell icon. Make sure you're tuning into the weekday streams. I come in live every day for you guys, Monday to Friday at 12:15 p.m. UK time. I aim to bring you the best crypto news I can. I try and break down news for you in a way that you yourself can understand it and you yourself can apply it to your daily lives, you know, and that's what I want to do. In the future, when the market is more stable, we're going to be talking about altcoins that I think can do hundreds of X's. We're going to be talking about fundamentals with those altcoins. We're going to be bringing out altcoin reviews. We're going to be doing interviews. We're going to be doing all sorts. For the time being, the market is stagnant. The market is declining. Therefore, the best thing I can do for you guys is bring you news that's going to help you in your day-to-day activities, your day-to-day trading. That's the best thing I can do for you guys right now. So show me support by liking the channel, liking the videos, subscribing to the content, hitting the bell icon, and I will see you guys again tomorrow at 12:15. Take care, everyone. In it for the tech, the NJ show. It's your boy Trader NJ.